British mining company Anglo American has rejected a revised takeover bid from Aussie iron ore giant BHP. Joining me now is business reporter Edward Boyd. Ed, I didn't think this would be some kind of quick sale here. It was always going to be a long, drawn-out process, but one we do watch with interest. BHP has increased its offer by 15%, and that's still not enough.
That's still not enough for Anglo American and its board. Remember, BHP here want to buy Anglo's copper assets, their metallurgical coal assets, and their iron ore assets in Brazil. So that would, and also their diamond business too. But basically, Anglo shareholders will still be left with a very large, sizable business that mine platinum and iron ore out of South Africa. So obviously, the first offer that BHP placed was on the early morning on Anzac Day a few weeks ago, and that was for about $60 billion. They've now lifted that offer by about 15%. The total value is only about $65 billion because BHP's shares price has actually dropped quite a lot since the first offer was made. But the way these things work, there's a lot of bargaining, there's a lot of stakeholders. The South African mining minister is very involved in this decision as well. So far, they're obviously not at the right price. But there was a statement just earlier today from Anglo's chairman. His name is Stuart Chambers, and he said the latest proposal from BHP again fails to recognise the value inherent in Anglo American. Anglo American shareholders are well positioned to benefit from increasing demand from future enabling products. And we had a statement from BHP's chief executive, Mike Henry, which they put on the stock market today. BHP put forward a revised proposal to the Anglo American board that we strongly believe would be a win-win for BHP and Anglo American shareholders. We're disappointed that this second proposal has been rejected. But remember, these are both non-binding proposals, Laura. We know May the 22nd is the final deadline for BHP to make a firm offer. So I'd suggest there's still a lot of toing and froing going on here between the two companies. And actually tomorrow in Miami, the chief executive of BHP will be on a panel with the chief executive of Anglo American at some sort of mining conference. So hopefully they get a chance to have a chat privately there.
Yeah,
and
I would love to be hosting that
deal-making.
one. Yeah, I would love to be hosting that one. Get a little word to whoever is hosting that they need a little softball question. Anyway, let's shift topics. The RBA's rate decision last week caused consumer confidence to fall even further. It's now at its lowest level this year.
Look, consumer confidence hasn't been great for a while, but basically this is the ANZ Roy Merkin Weekly Consumer Confidence Survey, and basically they say the RBA's press conference where they suggested that they did consider lifting interest rates and rates higher for longer, that's put confidence down a bit. We've got a chart we can show you showing consumer confidence going back to roughly 2014. You can see it is still pretty weak, but if we go to the next page, this is a zoom in on the past few years, and you can see there are three different groups, and the light blue line is people paying off a home loan, and they remain the weakest consumer confidence levels in the country. You've also got people that are renting, very low levels of confidence there, and the people that own their home are feeling a little bit better. But right now, confidence is the lowest level since 2024. We've just got to have a quick look at the stock market today. It's obviously open just ahead of the federal budget coming out tonight, and the ASX 200 is down a little bit in early trade, only down by 6 points, so pretty flat start to the market. I think we've had muted trading the past couple of days. There hasn't been a lot of share trading on the market because investors are waiting to see what's going to happen in the federal budget, because that could affect the share price for the rest of the year. Yeah,
right. So the budget still is a big potential market mover because it hasn't been in recent years.
Look, it is a market mover. It really depends on how much money the government's going to put into certain sectors. That will obviously be a positive for whatever sector of the market they want to invest in. We know they're going big on Australian manufacturing companies. There aren't a lot of manufacturers listed on the stock market. They're also going big on green energy businesses. There's quite a few smaller businesses on the market that could benefit from potential policies that the government are going to put in place. There's also the tax breaks for small businesses. I guess that could potentially give more confidence overall to the business sector, potentially result in a little bit more higher share trading volumes over the next sort of year. But we'll have to see what happens early tomorrow morning when the market opens at 10 a.m.
Okay. Merry Christmas to you and I. Budget day.
Thank you.
We'll see you soon.